United States Series EE Savings Bond. They're exempt from state and local taxes. A bull market is a period of rising stock prices. A bear market is a period of declining stock prices. Why does a corporation issue bonds? They do it for expansion or other company operations. Profit from the sale of property or an investment is called a capital gain. Dividend reinvestment plan for stocks. Dividends are used to purchase additional shares of stocks and the company that paid the dividend. What are the most common types of investments? They are stocks, bonds, and mutual funds. Before the KISS Corporation can issue stocks or bonds, it must register the issue with the Securities and Exchange Commission, known as SEC. A margin is a speculative method where an investor borrows up to 50% of money from a broker in order to buy a stock. A price of a security or stock may be affected by current events. Interest rates affect the price of stocks, bonds, and mutual funds, precious metals, and other commodities. Rule of 72, a simplified way to determine how long an investment will take to double by using an annual fixed interest rate. All you do is you take 72, divide by the interest rate, and that's how many years it takes for your investment to double. What is the SEC? It's the U.S. government agency that oversees security transactions. It stands for Security and Exchange Commission. Securities and Exchange Commission, U.S. government agency that's designed to protect investors, maintain fair and orderly and efficient markets. The New York Stock Exchange is the largest in the world. The American Stock Exchange is the third largest in the world. A pharmacy is to drugs as the American Stock Exchange is to securities. Invest and buy stocks. A stock split is when an existing stock divides into a larger number of shares and then the price is reduced accordingly. A stock is a share of ownership of a company. Yes, you can own Google, Apple, Amazon, Netflix. A T-bill, which is a treasury bill, is a secure, low-risk investment that's backed by the U.S. government. It's considered relatively risk-free. Diversification. Owning just one stock is very high risk. Owning many stocks, like many baskets, is much safer. If you're an investor who doesn't like risk, buy a T-bill from the government. It's secure, low risk, and usually a short-term investment. Using a brokerage firm, a qualified investor buys 1,000 shares of common stock at $50 a share on 50% margin. What does that mean? It means the broker loaned them 50% of the money. Yes! My personal finance course is going to make me financially successful.
Created using Powtoon.